Saturday, September 17th, 2016. Maneco 64, home of alternative economics and contrarian views. So Mark Carney, the governor of the Bank of England, has admitted on a radio broadcast where he was taking questions and talking to youngsters on the BBC yesterday that the Bank of England is not independent. Wow. You know, we've been told for the last 20 years that since Gordon Brown took over as Chancellor in 1997 that he gave the Bank of England independence, and that's why we've had low inflation and, the economy has done so well, except for 08, 09. The Telegraph covered this story, and basically the title of the article is, After 1200 Years, Could It Be Really Time for the Penny to Be Dropped? And basically, Mark Carney says that the penny's been, discontinued in countries like Canada and Australia and New Zealand, and that we should do the same thing in the UK. He admits, that it's because of inflation. Even though I thought we were in the depths of deflation, and that's why they had to keep rates at zero and do quantitative easing. So now, because the penny is going to be dropped, is because of inflation. But when we hear from these central bankers, we actually have dangers of deflation. So which one is it, Mr. Carney? But more interestingly, what he said, and I quote here, let's see. I quote Carney in the radio broadcast. I made the point that we keep inflation low, stable, predictable. But actually what that means, what Parliament tells us to do, or the politicians, is to make sure it averages 2% a year. So there you have it, 2% inflation over, annually. And what that means is after every 20 years, the currency loses about almost 50% of its value. So, and let's say after 40 years, the currency loses more than 100% of its value. So is it any wonder that people, not only here in the UK, but in the US, the middle class, the low, working class, or in the States, they call it blue collar workers, they're getting, poorer and poorer. Back in the 50s and 60s, you only needed, one person in a household to work to keep a family. Now you need two. So that's what inflation does to you. According to UK law, counterfeiting is a crime punishable, to a maximum of 10 years in jail. But when it's Parliament that decides that we should, inflate the currency or counterfeit the money, it's fine. It's the law. So, and basically, Mark Carney is just admitted that the Bank of England is not independent. But why does Parliament want a 2% inflation rate? Well, because Parliament and Westminster and the politicians, they're the biggest borrowers of money in the country. And the only way to write off that debt is to inflate the debt. And the debt nowadays, since we have fiat money, the debt is money as well. So if you borrow, if you debase the money 2% a year, you are debasing the debt, and it makes it easier for the politicians to stay in power and keep the welfare state going and keep people dependent. And it hurts working people because they're, the currency they use is always losing value. It's very difficult to save over the long term. If your currency is losing 50% every 20 years, it's difficult. It's risky. You put it in the stock market. What if the stock market collapses? Only the very wealthy and the very rich who have a lot of assets can protect themselves against this kind of, insidious tax. So, yeah, Mark Carney was quite honest here, but I don't think he realizes that what he actually admitted, that the Bank of England is actually not independent. But the thing is that the Bank of England and its agent banks, which are the commercial banks, the Barclays of the world, the RBSs, the Lloyds, these people benefit from it too, because, and the government benefits. It's like a banker politician monopoly of money. And what they do is, the more money that's issued, the 2% inflation a year, the more money the bankers make, because they have to handle more money, more loans, and then, they can buy more things. So they benefit from all of this. And that's why, the central banking system, where the government gives a monopoly to one bank to print the currency, is basically, in my opinion, totally against freedom, free markets, and fairness. A real fair banking monetary system would be one that you wouldn't have a central bank, one where the government and politicians wouldn't be involved in money. If they wanted to spend money, they'd have to tax people. And if they tax people, if they wanted to have their welfare state, they wouldn't be able to because people would say, I don't want to be taxed all that, so you can take my money and waste it. And maybe they wouldn't borrow as much either, because they'd have to they'd have to pay it back in real money. That's the thing. If they borrowed from banks that kept gold, silver, or Bitcoin, they'd have to pay it back in those real, valuable money. So there you have it. Only governments can create inflation, which is basically counterfeiting. And it's not surprising that since the early 70s, when the world went off the gold standard, when Richard Nixon closed the gold window, not surprising that we've had, so much inflation, and that, the working class, middle class is so much worse off. But the people at the top that can protect themselves, they're getting better and better off, because they have the wherewithal to protect their assets against inflation. So what's the only way for the average person to protect themselves? It's difficult. My suggestion is try to save as much as possible, but not in their currency, the Bank of England note. It's not a real pound. The real pound is a sovereign, really, a gold sovereign. That's legally still a pound. It's worth a lot more. Or you could save in silver coins or Bitcoin. So if you enjoy my video, please like, share, and subscribe to it, to my channel as well. Thanks for watching, and take care. Bye.